Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And let me make it really, really crystal clear when we talk about fiduciaries. There are people out there, a lot of them, who are fiduciaries at times. There are even some bad ones who are always a fiduciary. As a matter of fact, I regularly listen to and check up on the other radio shows out there that talk about money. And there's one on one of the teeny tiny stations in Seattle. They don't even show up in the ratings. Hosted by a guy who claims that he can use what's called the modern portfolio theory, which is a variation on what most good advisors use to build portfolios. It basically means the market's pretty efficient. You can't beat it. But then he goes on talking about how he can beat it. And matter of fact, on his website, let me just read this. He has a Q&A section of his website. It says here, Q, I've noticed your fees are high. Why? And the answer is, we believe pricing should reflect performance. Warren Buffett states the 350 hitter expects and also deserves a big payoff. Okay, well, he must be pretty good because I looked up his ADV Part 2. This is critical, folks. You want to know, you got an advisor, claims to be a fiduciary, may actually be a fiduciary. Now you want to check and make sure they're doing what's best for you. Go to this website. And if you're driving, you can't write it down, it's on talkingrealmoney.com. Go to advisor info, actually ER, advisor info, all one word, .sec.gov, or just type in advisor information, Securities and Exchange Commission, advisorinfo.sec.gov, type in the company's name, click on it. You'll find their ADV. It's supposed to be written in plain English, but it still can be pretty wordy. But the key is to go to their fee section, which I did for this firm. Here it is right here. Their fee for the first $500,000 of assets under management, that's how much money you have invested with, is 3% per year. I must tell you, that is the highest fee I have ever seen. 3% is right at the top. That is outrageous. That's outrageous. To make any money, you have to take out incredible risk at 3%. But wait, there's more. Now, this is not a hedge fund. This is a guy who manages $30 million. He has to charge that much, I guess, to make his nice, comfy living. In addition to that, when they have a good year and they make money, his firm gets 20% of the return. So it's 3 and 20. Those are the charges of the most ridiculously overpriced hedge funds in the world. And he claims that he's worth it because he does so well. Well, he actually publishes his track record, which is great. I'm glad he does. But he shows that after fees and expenses, from when he started doing this in 2004, he actually underperforms the S&P 500. He doesn't tell us how much risk he takes to do that, but he underperforms what people call the market, the S&P 500, turning $100,000 into $225,000 over those 12 years, from 2004 to 2016. So I just crunched some numbers during the break on a portfolio, if we managed it, of about 100% equities, which apparently is comparable because he's comparing to the S&P 500, so it must be an all-stock portfolio. Say that, but oh my gosh. Yeah, his managed account is just 8 to 12 stocks. Wow, that means his volatility, his risk profile, ridiculously high. Our portfolio would be about 13,000 stocks. And again, this is the hypothetical number based on past performance, not based on the future. But I was just looking, our all equity portfolio, the ones that we suggest to people, which would have owned, past tense, about 13,000 stocks over that exact same period after fees and expenses, which he says is so important, turned $100,000 into about $290,000 with less risk. That's what you have to be careful of. People will lie to you. They will. I mean, his whole thing is, I'm making you more money than other advisors, so I'm worth you paying 3% per year of your assets. 3%, not once. Heck, stockbrokers are better than this guy. At least they only charge you the 5% once. He charges you 3% every year. So you see, you have to be careful even about fiduciaries. I'm telling you, this guy should just be ashamed of himself. I'm not going to say who he is because I'm really taking him to task more than I usually take people to task. But yeah. All I can tell you is he has a show on the radio in Seattle, and I would avoid him like the absolute plague. His own numbers, this is from his own website. I'm absolutely quoting him, and it's embarrassing. And he pretty much shows that he underperformed the S&P 500 all along, even though he says he outperforms it. And yet he charges you those kind of fees. Who's getting rich off this deal? Would it be the client? Then he has the gall to quote guys like Eugene Fama. Eugene Fama said that few stockbrokers or money managers beat their benchmarks. But you're trying to convince your clients that that's exactly what you do, that you're one of those incredibly special people. Folks, there aren't any incredible special people out there managing money. I know you want to feel special. We all do. We all think we're above average. We all think we're deserving of the magic formula that makes you rich without taking any risk. And until you basically get over that, you will continue to be taken advantage of. You will continue to be ripped off. You cannot beat the market. You can be the market, but you can't beat the market. Even those who do it for a living don't consistently beat the market. And if you look at most of the big hedge funds out there, the giant traders out there, they make money by working really hard and using lots and lots of money to do it. Yeah, they can make a lot of money when something moves a penny or two. They can use these techniques of, selling something on one exchange and buying it back on another exchange. You have to remember, a lot of these folks just plain old cheat. They cheat. Is that you? Do you want to make your money by cheating? Well, if so, I would suggest you listen to some other show because we're not going to help you with that. 877-397-5666, 877-397-5666. Call me.
Tom and Don are talking real money.
Let's make a deal. We need reviews for our podcast to make it more popular, and you'd probably like a free year of Real Investing Journal. So, I'll trade you a year of Real Investing Journal through a $15 coupon code in exchange for a review at iTunes for the podcast Talking Real Money. Here's how you get your coupon code. Go to iTunes, write a review of Talking Real Money that at least goes into a second line, drop me a note at don@talkingrealmoney.com, along with the text of the review. I'll go check. As soon as I see it there, I'll send you the coupon code, and you can order the only real investing magazine, Real Investing Journal, and get the first year free. That's all there is to it. Just send me the copy of your iTunes podcast review to don@talkingrealmoney.com, don@talkingrealmoney.com, and I'll give you a coupon worth $15 off Real Investing Journal. Now, this is a limited time offer, and there's only one per email address, so go ahead and submit your review to iTunes, and then send it to me, don@talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, this weekend you get a guide. The other guide's on vacation. He's taking a couple of days off. I'm Don McDonald on a pseudo vacation. I took a few days off this week to come down and attend a friend's, or to come across the country and attend a friend's wedding in Southern California. And so I am actually doing the show from Disney's Paradise Pier Hotel. I'm up on the second to the top floor of that, looking out over the parking lot Oh, in the pool, but the parking lot. They got a lot of parking lots at Disneyland. 877-397-5666 is the phone number if you have a question about how money should work for you, about the things you do with it now and ways you might manage it better, how to avoid getting ripped off, how to avoid paying way too much in commissions and fees. You got to make your money work for you, and not enough people do. Because not enough people get the kind of advice they need because they, you know it. You end up going to a friend, somebody who sits down the pew from you in church or at the synagogue, or somebody who's in your social club, or even worse, an in-law or a member of your family, making it even more difficult to say no to that non-publicly traded REIT they're trying to sell you, or annuity of some sort. But you got to know what they're doing to you. You need to understand how this works. That is why the show exists. That's why we're here on a regular basis. And no matter when you're listening to the show, and you may be listening at different times on another station, like KVI in Seattle, or you may be listening to a podcast. Remember, you can call every Saturday. We're here almost every Saturday, unless we're preempted for football, at 877-397-5666. That's 877-397-5666. And this weekend, we're bribing you again with a free year of Real Investing Journal, the magazine that I started and Tom and I work on, along with a lot of other great people, 4 times a year to give you a solid investing education on a regular basis in addition to the show. 877-397-5666 is our phone number. Now, this is a word you probably have heard a lot lately, but prior to the last year or two, most of you never heard it. I've asked, what's a fiduciary? What is a fiduciary? You have a lawyer? Your lawyer's a fiduciary. Doctor? Your doctor is a fiduciary. A fiduciary is someone who has a legal obligation to do what is best for you, not for them, to put your needs ahead of their needs. It doesn't always mean they do it. This is not a guarantee that you won't get taken advantage of, because Bernie Madoff was required to act as a fiduciary. There are doctors out there who give horrible medical advice, even though they're required to act as fiduciaries. There are lawyers that give terrible advice, but they're required to act as a fiduciary. However, if they weren't required to act as a fiduciary, they could say almost anything and do almost anything with very little fear of retribution, because the other standard that exists in the financial services industry is called the suitability standard. Suitability is a big, huge, wide open opportunity to take advantage of you, because all suitable means is it doesn't have to be good. It just has to be okay. So they can sell you, for example, one of my least favorite products ever, a product that I fervently believe was created for one purpose and one purpose only, and that is to rip you off, are these non-publicly traded REITs. They are bad investments, and any fiduciary who sold one to you would be in huge trouble. But the non-fiduciaries, hey, no problem for them. They can do whatever they darn well please, because it's merely suitable. You have enough money. You have enough information in front of you. They handed you a prospectus. Caveat emptor, buyer beware. We'll talk more about that, and I got a bunch of other cool things too. Bart, welcome to Talking Real Money. Hey, Bart.
Hi.
Hey, what's up? What can I do for you?
Yeah, I actually had a couple questions, but I heard you talking about that free subscription. My wife and I are kind of at a point in our life where our income's gonna go up substantially, and I want to look to invest, and I'm kind of trying to educate myself on the stock market and things like that, and I know that can be dangerous. First question is, what do you think about these cannabis stocks? Do you think that that's something that could turn into a huge boom or a huge bust?
The correct answer, and anyone who tells you anything else, is either one. And actually,
really?
Both. Because there will be some companies that, if this continues to spread around the country, will make good money. They'll do well. But you're never going to know which one that is, not in advance.
Right.
Remember when computers were booming, and they were just really starting back in the 80s? You had the TI $99 something or other, and you had Radio Shack selling computers, and you had Osborne selling computers, and all of these guys, and Commodore, and which two computers? I mean, did you know it was going to be Apple and IBM in essence, or eventually Microsoft?
No, there was no way of knowing that.
You're not gonna know which cannabis stock is going to do well. That's why, to me, and to Tom, and to the academics, that we believe this is not a game. Investing's not a game. You don't try to win, and that's the problem with most people. Is they act like it's a game, like it's a gambling process.
We're looking at having right around $5,000 a month disposable income, and I'm thinking we should be doing something with it.
You absolutely should, but the kind of investing that we espouse is the same thing that is espoused by Vanguard, by a lot of academics. It's just simple. It's buying the world. You buy the world. Then you'll have some cannabis. And if you think gold's going to go up, you'll have some gold. Bigger, thinking bigger. For example, for a do-it-yourselfer, the Vanguard Total World Stock Index Fund has 7,500 stocks around the world. How could you lose money on 7,500 stocks long term?
Oh, I see. Okay.
You pretty much can. And that's the message that we convey on the show. That's the message that we convey in that magazine. And don't hurry to do anything. And make sure that anybody who's giving you advice, you've vetted very carefully. And keep listening to the show. You'll learn how to do more and more of that.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full-color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
Reality radio for a really great future. We're talking real money.
Spend a little time straightening out one of life's most important issues, getting investing right. Because this is how you build the wealth to enjoy the life you really, really deserve when you stop or reduce the amount of work you do for a living. And so many people get it so wrong that you really need to be a part of this program every week. 877-397-5666 is our phone number. 877-397-5666. We'll even bribe you this week to get you to call in with a free 1-year subscription to Real Investing Journal for being a part of the show. 877-397-5666. And Tom, you're up. Welcome to Talking Real Money.
Good afternoon.
Hi, Tom. What's up?
Well, sitting here on waiting, I realized that I could have just called Vanguard, but I thought maybe I'd talk to you. And if I put some money into Vanguard, one of the funds or two of the funds, doesn't matter. How do you get your money out? Can you tell them you want X amount of dollars a month, or a quarter, or a year, or just how does that How
You
does
can
that
do
work for
all
income?
you can do all kinds of things. You can do all kinds of things. You can contact Vanguard at almost any time and have them cut you a check. You can set up distributions that just go into your checking account. What most people do is, and what I suggest you do, is you have your investment accounts, which are your stock funds and your bond funds. And every 6 months, maybe a year, take out of that what you need to live for the next year, however much that is, and put it into a very short-term bond fund or even a money market, probably a very short-term bond fund, and then take your distributions into your checking account from that, so that you're taking the money out of a fund that's not very volatile, like a money market account, which is non-volatile, and you can then worry less about the withdrawals from your other more volatile vehicles throughout the course of the year. Make sense? Okay.
Oh, sure. Yes, sir.
Thanks
I
for the
appreciate
call,
your
Tom.
time.
Anytime, sir. Thanks for being there. 877-397-5666. And Josiah, welcome to the show. Josiah
thank
and
you.
dogs. Yeah, and how are the dogs?
And dogs. Sorry about that. They're
No, that's
doing
okay.
great.
I have dogs.
But I was
What's
just
up?
calling in because I was just wondering. I just turned 22 a couple of days ago, and I am so lost on where to begin investing. And I just was wondering if you had any really practical advice, because I've been doing some research online and nothing has really, I'm very skeptical of everything that they've been telling me. So I want to hear
Thank
from
goodness.
a real expert.
Thank goodness somebody's skeptical. You should be skeptical. I've been skeptical most of my adult life. It's good for you. Almost cynical, people would say. But hey, whatever. It works. Okay. First, how much are you going to be able to set aside from your paychecks to invest?
Not much. I don't have a lot of disposable income, so that's kind of where the struggle is for me, I think.
Do you have a 401k at work?
Nope.
Not one offered at all.
No, not one offered at the place that I'm currently working now.
Is there, okay, you say there isn't much disposable income.
Yeah.
If you really had to squeeze blood out of the turnip that is your life, how much could you squeeze out of it?
I could probably get maybe, I would say $400 a month that I'm trying to just put away in savings right now.
That much? Well,
Yeah.
darn. Okay. Do you have an emergency pool of money yet?
I do. Yeah, I have about $1,000 just for crap fund.
Well, now you need a little more than 1,000. So take that 400 and for the next 3 or 4 months, get that into a very short-term bond fund, like a short-term government bond fund at Vanguard that doesn't yield much. It yields about 1%, but it's pretty darn safe. It won't fluctuate much. And use that for your emergency funding, or your emergency money in case something goes, the car breaks. $1,000
Right.
isn't going to cover it if the transmission goes out.
Mm.
You want to make sure you have enough for that so you don't have to ever touch the next part I'm going to tell you about. Once you've done that, as a matter, you may even want to, push it to a year or so. Once you've done that, though, then I would like to see you go to, and you can't really go to Vanguard yet until you built it up, but you could do this through TD Ameritrade. They don't have a minimum. Set up a Roth IRA with them. Have that $400 or $300 or whatever the amount is drawn out of your checking account, put right into an ETF with them called VT. It's the Total World Index in an ETF. There's no minimum, no transaction fees, and do it in a Roth IRA so that money grows tax-free and you will be a rich man in retirement.
Tom and Don are talking real money.
Hi, brief break time. I'm Don, and I really wanted to share this with you because this is something I'm really excited about. I have taken much of the work that we do for our online Real Investing Journal and put it into a quarterly magazine that is, I have to say, pretty good and pretty cheap. And it is the only publication I can find anywhere that is totally devoted to real investing. You will find no business news there. You will find no lifestyle information. You will find no hard news, political news, speculation stuff. It's all about the science and the process and the discipline of real investing, and it's a way to keep you on track toward a better future. It comes out 4 times a year, and it's going to cost most people $25 a year. That's all, just $25 a year. But because it's brand spanking new, a limited number of people can become charter subscribers at the lifetime price of $15 per year. Plus, I'll get you a copy of the very first issue as a bonus while the supplies last, of course. So here's all you need to do. Just go to realinvestingjournal.com/subscribe and subscribe. And you'll start getting it in the mail every quarter. If you're one of the first, 200 or so to subscribe, you'll also get the very first issue as a bonus. So be one of the first to get the very first magazine ever about investing and nothing but investing. Real Investing Journal, and you can subscribe right now, really easy, realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe. Now back to the show.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosure.